morning. Today is Friday, April 11th, and we are looking at the E-Mini S&P 500 daily chart. And you'll see, just like the overall market sold off quite a bit, right? We first topped out here with this bearish engulfing pattern, barely broke up through the all-time highs, right? Took it out a couple days and then a big reversal. We slammed down pretty nice, came down close to the gray action zone right here, bounced. But if you notice, it bounced to a 50% retracement, a 50% Fibonacci level from the all-time high, right, from the all-time high here down to this low, 50%, before selling off yesterday big time. All right? So right now, I mean, the market's opened up lower, but we're in that gray action zone now, testing these lows. All right? And if you look back even further right in here, right here, this was a range for quite a while, right? So that's why I've got the two white horizontal lines right there, right? The high of the range and the low of the range right here. So I actually believe that we're going to probably stage some type of rally today. I think we're at the lower end of the range that we saw for almost a month in here, back in early January, right? Right in here. We're at the lower end of that range that we traded so frequently in, right, in January. And then again, we traded in that range for quite a while right in here before breaking up, right? We bounced at the upper end of that range the first time back right in here, bounced up, tested the highs, came down, tested the upper end of that range again, bounced up, made all-time new highs, and then we failed, and then we came straight down through those. Now we're at the lower end of the range for the very first time, right? So the lower end of the range, right? These are value areas where the market traded for quite a while. These areas should act as support, and we're seeing a little rally here. So we've opened up lower, we gapped lower, we're exactly at the bottom of that range, right? Hit 1813 and a quarter, and we're starting to bounce. So I think if someone were to try to buy it in here, I think you could buy it in here, but your stops have to be below the 50% of the yearly range. Okay, so let's take a look at this. This is the low of the year. The low of 2014, the high of 2014, right? Let's draw the fibs, even though I drew them. Let me show you how to do it in TradeStation. It's really easy. Let's take these out. Go over here, click on the fib tool, measure from low up to the high. So again, I just measured the Fibonacci retracements from the low of the year of 2014 to the high. The 50% retracements right here, see that line right there, slightly below the low of the range that I pointed out recently. Okay, look at this range. Okay, so stops would have to be placed below that 50%. That 50% is below that gray action zone, but I think it could provide support right down in here. We'll see though. It's almost 10 o'clock in the morning, so the first half hour to 45 minutes is very, very important. It helps it sets the stage of the day. If the market can continue moving up off these lows without coming back and taking out the intraday low, I think we could stage a nice rally to the upside, but that's only if in the next 15 to 20 minutes we can sustain this up move without breaking down through the lows. Okay? Just remember, the low or the high of the day is typically 80% of the time put in place in the first hour of trading. Okay? So let's just see what happens. Let's see. Just want to quickly remind you of my class tomorrow. I'm doing a live class where I show you exactly how I swing trade and specifically what I look for. And I'm going to keep it real simple. It's going to be 2 to 3 hours, but I'm going to give you enough meat, obviously, so you can start trading it Monday. Okay? So I hope to see you there. All you need to do is go to tradingconceptsinc.com and then just type in swing trading-stocks and watch my 15-minute video, and I'll tell you all about it. All right, hope to see you there. Bye for now.